but we have a major focus on that. While on a console basis, especially climate technology has registered quite decent performance.
The conference is now being recorded.
Here as a whole, climate technology in INR has grown by about 21%, and during the quarter, climate technology, it has been a turnaround quarter. In fact, on account of climate technology, Symphony India could sell air coolers worth of about 21 crore in US market during the quarter. And down the line, there is great opportunity. Coming to a gross margin percentage, on console basis during the year, gross margin stands at 45% versus 47% year before. However, during the quarter, the gross margin percentage on standalone basis is down from 56 to 48% due to reasons explained by Achal. And in addition to that, there has been also sharp increase in freight costs, as well as during the year, the sales made to climate technology as well as US, whereon the combined gross margin percentage is significantly higher. However, it has been divided between Symphony India and climate technology. So on a standalone basis, there has been a reduction in gross profit margin percentage, but on a console basis, it is in fact around 60%. While on a console basis, the point to be noted is, despite standalone decline, but robust performance by climate technology, as well as increasing gross profit margin percentage by Inco Mexico, climate technology, and maintaining the GP margin percentage in GSK for the quarter, consolidated GP margin stands at 48% in line with previous year. The EBITDA to gross revenue percentage on a console basis has seen almost 400 BPS increase, up from about 22 to 26. As far as the profit after tax is concerned, on a standalone basis, the PAT has increased by about 10% against top line growth of 37%, that is at 49 crore. And apart from other reasons at a PAT level, it has been also partly impacted because we deem it appropriate in the March quarter to spend substantial higher amount on sales, promotion and advertisement in the expectation of good summer. So the additional cost was about 8 crore vis-a-vis previous year. However, on a console basis, one, because of the turnaround of climate technology, and also on account of decent performance by overseas subsidiaries, the consolidated PAT has seen a sharp jump of 60% and stands at 64 crore versus 40 crore in March 20. Again, the PAT is historically highest ever, and earlier highest ever profit after tax on a console basis in any quarter was that was in September 19 of 58 crore. So vis-a-vis that, it's up by almost 11%. While coming to efficacy of funds deployed in the core business, that is air cooler business, on a standalone basis, Symphony very much remains as asset-light, capital-light business model, and also partly so even on a console basis. So year as a whole, the funds deployed in the core business, that is the capital employed, is about 50 crore on a standalone basis for 2021. That includes investments in fixed assets, working capital, net of advances received. While on a consolidated basis, it stands at 282 crore, which includes, of course, fixed assets, working capital, plus also acquisition cost. And that translates into, on a standalone basis, EBIT percentage or return on capital employed in core business about 41% on a consolidated basis, while on a standalone basis it is 237%. As far as the surplus treasury is concerned, as on 31st March 21, it's about 519 crore versus 433 crore year before. That is up by almost 87 crore. And this is excluding equity investments and loans and advances given to subsidiary companies. As far as current quarter or year as a whole for Symphony India, year certainly began on a very, very positive note. Overall, there was a lot of buoyancy, very, very positive sentiments, and we had prepared for a very robust summer sales. Until about a week before, we have registered excellent sales. However, since last 1 week, on account of COVID-19, now there is some uncertainty. However, current year, despite major COVID issue, there is no stringent lockdown in most part of the country, and still entire months of May and June are there. So we are keeping the finger crossed, and for sure, if there is a reasonable revenue, which we are optimistic, then June quarter should be still a decent quarter. However, in any case, June 21 is going to be far, far better than June 20 quarter, which last year was a washout quarter. As far as Symphony Australia is concerned, so as it was shared in the past, we have taken series of initiatives, including the business model, including the value engineering, including cost rationalization, etc., etc. And as it was indicated in December quarterly performance, the March quarter has been a turnaround quarter, and the journey is expected to continue. However, despite decent increase in top line for Climate Technology Australia, the year was impacted, one, due to increase in raw material costs, as they could not import many components from China, increased freight costs, as many components were to be airlifted, as well as increased labor costs. But it seems all these issues are now behind us in Australia, and unlike India, whether in Australia or US, the situation is much under control. And last year, despite COVID issue, there we registered the growth, and that momentum is likely to continue. And in addition to that, good amount of climate technologies business is going to be outsourced from India starting current year itself. So that will help in terms of Symphony's overseas business, its export, and also improvement in profitability. Coming to Inco Mexico, the sales was impacted due to COVID-19. However, we succeeded in further improving the gross margin as well as contribution margin percentage due to various initiatives. But we had to provide for doubtful debt of about 7.2 crore during the year, and hence that resulted into almost break-even. Otherwise, even on declined sales, the absolute PAT would have been higher than previous year. And as far as GSK China is concerned, again sales was impacted due to COVID-19 as well as variety of reasons. However, in March quarter, it has seen a trend mainly in the domestic market. However, exports from China have been severely impacted. And there also we have succeeded in maintaining the gross margin and contribution margin percentage. And as I said earlier, overall, we are reasonably confident as well as optimistic for our growth and performance in a medium to long term. The recovery was and may be delayed, but certainly it is not derailed. For sure, in medium to long term, we expect on a CAGR basis very sustainable performance. And finally, we have announced final dividend of rupees 28 crore, translating into 4 rupees per share, that is 200%, and including interim dividend, it amounts to about 33% payout. We have been slightly conservative because we have deemed it appropriate to conserve the resources, and also importantly, end-to-end dividend is relatively less tax efficient. So at the right time, we may like to go for subject to board approval, share buyback also. Thank you. So we are open for question answer. And of course, all our comments and our response to question and answer are subject to customary disclaimer statement. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line. Oh, sorry to
Madam, there seems to be some background noise.
Yes, sir, just give me a minute.
Yeah, we can hear you.
Hello. Girish, are they on the line? Investor can.
Yes, sir, they are connected. Just give me a minute.
Okay.
The first question is from the line of Daljeet Singh Bhatia from HDFC Securities. Please go ahead.
Thanks a lot. This is Inder here from HDFC Securities. Couple of quick questions. One is, given the COVID situation right now across the country, do you think what would be quarter one compared to, say, quarter one of FY20? Is there kind of a ballpark guess as to how we'll end up there?
Yeah. Achal bhai, should I take or you would like to respond?
Mr. Shah, sir, I'm calling the management line. In the meanwhile, you can answer the question, sir.
Oh, I see. Okay. No, so as I said, so far in about first 4 weeks, performance has been quite decent. We are also sitting on decent pending orders also. However, as I said earlier, for last 1 week, some uncertainty has come in. But we expect that overall the lockdown almost across the country, barring few regions, is not as stringent as it was. And once this situation reasonably settles down, maybe in about 2 to 3 weeks or so, still we will have almost half of the quarter. And so we are keeping the finger crossed. But still it depends upon how the situation evolves. That's number one. And number two, irrespective of that, considering the sales what we have already achieved and orders in pipeline, and I think reasonably we expect that in about 2 to 3 weeks situation may settle down reasonably. Then it may turn out to be still decent quarter. May not be in line with blockbuster quarter as originally we were expecting, but certainly this quarter is going to be far better than June 20 quarter, which was in a way washout quarter.
Okay. Anything compared to June 19?
June 19, we expect if in 2 to 3 weeks situation reasonably settles down, it may be close to it.
Okay. My second question is, look, air cooling has been a very unorganized market for many years in India. But in the last year or couple of years, we have seen a lot of organized consumer electrical companies starting to launch products here. So how do you see the competition shape up? Are you gaining market share from unorganized? And how are these companies kind of faring? Any comments on the competitive landscape would be good. And that's it from my side.
Yeah. Achal, will you like to respond to that or should I take?
I could, but could you please repeat your question? We lost the audio in between for a brief while.
Okay. I'm just asking that it was traditionally a very an unorganized market, coolers, and now we have seen in the last couple of years a lot of larger players starting to launch products in this category. How is this kind of moving the market? Are unorganized losing market share very significantly and going into the new players? So any comments on that would be helpful.
Okay. No, see, it still remains a market or a category dominated by the unorganized sector. That hasn't changed. Still, in our estimation, about 70% or so, 70-75% of the total volume of air coolers sold would be from the unorganized market. So whether it is us or all our competitors put together, would be catering to only barely a quarter or so of the total number of units sold. We have seen a lot of interest in this category in the last few years, and there has been a spate of new players that have got into it, but that so far hasn't dramatically altered the ratio between organized and unorganized sector. So by and large, I would say that the newer players and existing players are sort of slicing the pie amongst themselves.
So in that case, how is our market share kind of moving?
So our market share has remained fairly steady. I would say that the newer players, partly the market has expanded, and the market of the newer players have taken market share mainly from our competitors.
Got it. Thank you.
So value-wise, by and large, our market share has remained at about 50%, and newer players acquired that market share from number 2 and number 3 players. And secondly, overall, in the medium to long term, the trajectory of shift from unorganized to organized is like about 8 to 10 years before. Unorganized was contributing 90% of the overall sales, which is down from 90 to 75% or so. However, in absolute volume, because overall take size has increased, their volume has increased. But organized sector growth is even faster than that, and that is a continuous process.
If I may just ask, what is the total organized market size right now, and what is the total market size?
So size-wise, our estimation is about 80 million. I'm sorry, 8 million.
That's volumes. Value-wise?
Value-wise, again,
about 4,000 crore.
4,000
About
crore.
4,000 crore.
Got it. That's good enough. Thank you.
Thank you. The next question is from the line of Abhishek Ghosh from DSP Mutual Fund. Please go ahead.
Hi, sir. Thanks for the opportunity. So just a couple of questions. If we look at your domestic or the standalone revenues, which is almost about 212, which is one of the highest, if you can just help us understand two things. Is the element of goods being shipped to climate, because then that is not, which is largely getting reflected in the rest of the world. And also there were some shipments which was kind of stuck in Q4FY21 and was it largely related to city only? If you can just help us understand these two aspects.
So just pulling out the numbers. So the sales to our Australia and USA subsidiaries together, Climate Technologies, one way or the other, is about 25 crores.
Okay. And what would be the subsequent number in the previous quarter, say last year same quarter?
It was negligible.
So this 212 crore number is higher by 25 crores because of the overseas business, largely to look at it that.
Yes, you can say that.
Okay. So still you are left with about 180 crores of broadly 178 crores of domestic sale, which is also kind of one of the highest numbers as far as standalone is concerned. So is it more to do with the industry itself has done a very good number because of the pent up in this thing, or you have gained market share because of the supply chain disruption or other things? How should one look at it?
So, from what we have gathered from our sources, that this has been basically, at the expense of the competition. So this has been a market share expansion that we have seen in the last quarter.
Okay. And this you believe is a kind of sticky, or will it go away as things kind of normalize? Any sense around? Because you've also mentioned that you have increased your focus points as far as the non-urban rural is concerned. So is it bearing fruits? How should one read it?
The voice keeps on trailing off, but from what I've gathered, you have asked is that, so I can say that, it's a combination of factors. It's not coming to any one single reason. So it's a combination of our push into rural markets and into uncharted, territory. And also because of the kind of models that we have introduced in the last 1 year. I would say that our channel partners have also been quite aggressive, so it's a combination of various factors, including our ability to deliver, our ability to manage the supply chain. So it's a combination of various factors.
Okay. And so just one last thing, you also alluded to the point that the gross margin has suffered a little because of the sharp RM price increase. So in the Q4FY22, have you taken subsequent price hikes to kind of offset that? Has that been kind of taken in the marketplace?
No. See, because that is something which will happen gradually, because we are in the middle of the season, so we haven't done all of that. It's all begun. We have partly done it, and it will happen partly in the months to come.
Okay. But over a medium term, you will again mean revert to that 50-52% of gross margin in the standalone business. That's the way to look at it.
Yes, you can say that.
Okay, sir. Thank you so much for answering my questions and wish you all the best. Thank you.
Thank you.
Thank you. The next question is from the line of Bhavin Vitlani from SBI Mutual Fund. Please go ahead.
Thank you for the opportunity. Just continuing on the previous participants, could you help us with the price hikes you would have taken during the course of fiscal year 21?
There are two things. One is, I would not like to say that on an open line for competitive reasons. And secondly, it's not even very pertinent to the forum.
No worries, sir. So, the second question again is when we speak to your other listed peers, they tell us that the margins are in the band of 13-15% at EBITDA level, about 10 percentage point lower than your margins. If you could help us bridge what actually drives, because it seems you are more cost efficient. So where are the cost efficiencies that you are deriving, and what part could be the premium pricing that the Symphony brand carries?
So again, it's a combination of both. So our I would say manufacturing and our operation, the way we manufacture is probably more efficient. But more importantly, the market actually pays a premium for Symphony. So it isn't as if we are pricing our products, higher than the market. It is actually that the rest of the market doesn't price their products as the same as Symphony. They have to price themselves at a discount to Symphony. So that is why you see the delta between them and us. If we were to reduce our prices theoretically, academically, let's say, then they would be forced to reduce their prices. So that delta is bound to remain, So it really is, combination of both. Like I said, the premium that the consumers are willing to pay for Symphony, and which is what is sort of accepted and recognized by our worthy peers. But it's all, and it is partly due to our manufacturing efficiencies.
Sure. So what part would you attribute to the premium pricing? percentage?
And in continuation of that question, so in addition to what Achal Bhai said, there are also some path-breaking models in which as such model-wise, feature and performance-wise, there is no competition. And we are in a position to get a good pricing and profitability, and that's a continuous process. And secondly, in our case, we are a very cost-conscious company, and hence, even though in March 21 quarter, our gross profit margin is lower vis-a-vis previous year, but year's margin will be even worse than this, even on a lower base. Because we know that some of the initiatives and value engineering what we have done, it has restricted to this level. Otherwise, actually, reduction in gross profit margin percentage would have been even steeper.
Sure. Thank you so much for taking my questions.
Thank you. We would like to remind participants that you may press star 1 to ask a question. Next question is from the line of Manoj Gori from Equirus Securities. Please go ahead.
Yeah, thanks for the opportunity, sir. So my first question would be on the domestic market. So obviously, as Nitesh sir also indicated, that the momentum was pretty strong, maybe around a week back. So given the case, obviously there would have been a lot of primary purchases. And so just wanted to understand what are the inventory levels with the channel partners?
Your voice is not clear, Manoj. You will probably keep it
better now?
Further away.
Yeah. Is it better now, sir?
I want you to move to a better reception area, sir.
Is it better?
Yeah, better.
Yeah. Thank you. So I just wanted to understand on the inventory side, like what would be the inventory currently with the company as well as with the channel, and if you can quantify number of days, because obviously given that there is a lot of uncertainty in the near term, so whether this might impact our Q2, Q3 performance, or whether the extent would be limited to Q1 performance only.
So the inventory at this point, whether with the company or the channel, is no higher than it normally is at this time of the year. And were it not for the last 1 week or so of pandemic-related disturbances, it would have probably all been sort of cleaned out by now. So it is really nothing of any significantly high numbers. What remains to be seen is how long is this lockdown and this disturbance is going to last. We are hopeful that this will not last too long, and we have the whole month of May and June ahead of us. So whether it is the current inventory or what we are even now as we speak producing and intend to keep on producing, we don't see a problem in being able to liquidate that inventory.
Right. And sir, secondly, on the subsidiary businesses, obviously climate would be one of the major, climate did witness one of the major improvements in the overall operations. So if you look at the one-off, like the order that you talked about on 25 crores to US market, so what's the nature of that order, whether it was one-off order or whether it would continue in the coming quarters? And how things are looking for climate, as you already highlighted, like things are relatively better. So can you give some more comfort or color on future outlook on climate technologies?
So first of all, that order is from Home Depot, which is one of the world's largest retailers of its kind, $120 billion company. And this is an existing and a very old customer of climate technologies. So what used to earlier go from China has now been, the manufacturing has been transferred to India, and which is why we saw that business. So this is not a one-off thing. This is the customer has been with Climate Technologies for God knows how many years, 10, 20 years. So it's an ongoing business. It's an additional business that we have also been able to do because of new models that we have added, the Symphony portfolio of models that we have begun to sell in the US. So this is an ongoing customer and will remain an ongoing customer. So this is not a one-off thing. As far as Climate Technologies is concerned, within Australia, we have seen a good top line growth, but then we have not seen a corresponding growth in the bottom line. Again, for the same reasons, sharp increase in commodity prices because of unavailability of components, unavailability of being able to import components from China. We had to buy local components at Australian prices, so that has also taken a toll on the bottom line. So basically, logistic costs and high raw material costs have had an impact on the cost of goods sold. But the good news is the top line is there, and if there is no top line, there can never be a bottom line. So if you have the top line, then you can at some point be able to manage the bottom line. So at least I think that is what we have to sort of recognize. And so with that, I think once things normalize, hopefully this year, then the bottom line should also be significantly better in line with the top line.
And Manoj, for information, the total US business, including exports from India and what Climate Technology has generated, put together during the year has been $13 million, close to 95 crore. So that itself is a sharp jump from previous year, and that's what we were looking for. And we expect actually down the line even major potential. Right.
So that was very helpful. So lastly, if you can give the subsidiary numbers, even as the year end, and so for FY21 as a whole, like what would be the numbers at revenue, EBITDA, and PAT level for the three subsidiaries?
Again.
Sorry, sir. Can you provide the subsidiary performances for FY21 for all the three subsidiaries, like revenue, EBITDA, and PAT?
Yeah. No, by the way, we have already shared in data sheet not only the performance but critical analysis, not only for the year 2021, but for each of the subsidiary and Symphony India as well as consolidated, even for March 21 quarter, vis-a-vis corresponding quarter.
Sure. I missed it, sir. Thanks a lot, sir.
Thank you.
Thanks.
Participants, to ask a question, you may press star and 1 now. The next question is from the line of Renu Baid from IIFL. Please go ahead.
Yeah, hi. Good evening, sir. So my first question would be to understand on the commercial air cooling side of the business, how has the year gone by, and now that we are seeing uptick in terms of domestic investments and capex, how are we looking at this business shaping up?
So in the year that has gone by, of course, it wasn't all that good for obvious reasons. But in the last few weeks, we have seen, a sharp increase in business in the industrial and commercial cooler space. And we expect that in the current year, 21-22, there should be, significant growth in that vertical.
But would we now be in a position to share some numbers in terms of how this business scaled up, or any medium-term targets over the next 3 to 5 years for this business?
As we speak, of course, for the last year, there is no point in sharing those numbers. Those are really, nothing significant. But going forward, once we believe that they are meaningful, we will be more than happy to share them ourselves.
Sure.
And there are obviously internally there are targets and there are plans, business plans, and all of that. But again, they may not be something which we would be very happy to share, in a larger forum.
But at least, would you be able to share some inputs in terms of how has been the update with regards to the dealer distributor network, getting registrations and qualifications to consultants in this business? Any quantifiable numbers or details that we can share here?
For industrial and commercial segment?
Yes.
Again, that is not something that we will be very, happy to sort of divulge.
Sure.
And whatever we can share, we are sharing in our data sheets and in our whatever else, all of that we are sharing. Beyond that, we aren't too happy doing that.
Okay. Second thing would be, as in now that in the last...
Renu, in that respect, just to refresh, we have launched molecule range of air coolers under centralized and ducted air cooler, and for that we have created the separate range of dealer distribution network, and that range, having couple of models, is receiving quite overwhelming response. And as we had shared earlier, since last 1.5 years or so, centralized and ducted air cooler are completely being outsourced from India instead of earlier practice of import from China and Mexico, and that is leading to couple of advantages. One in terms of the custom duty saving, logistics, and even smaller order and lead time, etc.
Got it. And second, for the core business, now that over the last 1 year, bulk of, we have seen customers moving towards online e-com platform. How do those channels stack up for us in terms of revenue mix for us, and how has been the inventory levels and the overall performance of regional retail and the modern retail format for us?
So, Natasha, you want to answer?
So regional retail and modern retail was significantly impacted last year at the onset of lockdown. So both from...
Sure. Yeah, so Renu, in March quarter, as such, large format store has registered significant growth over March 20 quarter. In fact, surpassing the sales of year 1920 in March 21 quarter itself. And as if we segregate e-commerce out of that, e-commerce has registered in March quarter more than 100% sales growth.
Sure. In terms of the revenue mix, do we have some numbers to give some perspective?
Again, not something we'd be very happy to divulge.
Okay. And now if you look at the core domestic revenue, so of the 212 crores of revenue, 38 was approximately export from the standalone. The remaining 174 crores was the broad number for domestic market. So if you look at this number from two perspectives, throughout last year, we did not see much of off-season sale happening because of channel inventory. And second, throughout most of the other electrical categories, we have seen significant loss of market share from small and regional players. You had mentioned that bulk of the revenue growth that you have seen, or the incremental growth seen in the 4Q, was due to market share gains. So in your view, wanted to understand, has the channel stocking improved back to normalized levels? Had these external environment been broadly steady? So as in, are the channel partners now broadly ease at their inventory levels and they are placing orders? And second, cooler as a category itself, as in there is significantly higher level of unorganized players. So to that extent, the quantum of market share gains for Symphony, which has 50% market share, do you think that has not been up to the mark or slightly fallen short of expectations? Or probably those numbers might reflect in the June quarter.
We don't believe so. The confidence in the trade has been pretty good, and which is why that has been reflected in the March quarter numbers. So really speaking, there has been no, remarkable change from the previous years.
Okay. Sure. And the impact of significant market share gain should be seen in air cooler as a category as well, the way it's seen in most other segments throughout last year for you?
Yes, very much, very much. Now again, it all depends on, the market share, yes, in terms of overall what happens to the market remains to be seen with the current situation, but we are quite hopeful. Like I said, we have the whole month of May and June ahead of us.
Mm-hmm. Got it. And one last question, if I can. We have seen quite a few new launches being done, including certain specific e-com driven SKUs being launched by Symphony. Can you share some inputs in terms of the new product launches, in terms of the broad mix expected in terms of sales for this year? And what are we planning on this side?
Right. So apart from the models that we had launched, in the beginning of end of last summer or beginning of this current business cycle in July, August, we have recently launched a unique model, which is so far exclusively on Flipkart, and later on it will also be available on Amazon. A model called Duet. It's again a path-breaking model. It's a tabletop cooler. It's a range of two models. One is a tabletop one, and the other is what we call a pedestal cooler. If one were to sort of go on Flipkart and look at Duet, D-U-E-T, one will see how distinct the product is. And this has been positioned not only not really as a cooler, but more as a cooling fan, for a variety of reasons, as suggested by Flipkart and Amazon. So that is, one of the newest innovations from the Symphony stable. And so the product innovations from Symphony just is a way of life, and this is just one more, and there are more products to come and more innovations that the market will see in the months to come. And this has been just very recently been introduced, and whoever has sort of used the product has given us rave reviews, so that's one thing which we expect to sort of, last year we launched very, very large coolers. They're the largest coolers that India has ever seen. And this is the smallest or among the smallest coolers that India has ever seen. So with this product, we have sort of covered both extreme ends of the spectrum, the very smallest to the very largest. And both are extremely, I would say, different and innovative.
Sure. And this new product launch, as it has been positioned as the fan and price-wise also quite competitive and still decent margin, it has a potential to sell around a year at a customer level also.
Thanks a lot for your response. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Hitesh Tong from ICICI Securities. Please go ahead.
Hello. Thank you for the opportunity, sir. Sir, my question, I have two questions. One is, sir, if you can give them some a total dealer number in FY21 vis-a-vis FY20. And this is the first question. The second question, sir, how many launches we did in FY21 vis-a-vis FY20? And sir, third question, if I may ask, sir, I missed that market share part of your comment, sir. Since we have seen a significant market share by organized player in the during these lockdowns and disruptions from the unorganized side. So if you can throw some light, in terms of understanding how or by when we may see a kind of market share gain by around 200 or 300 or 400 BPS points from now, sir.
So first of all, such a precise number of 200, 400 basis points in market share, it would be very difficult to communicate, because this is a market in which there is very little information available. We are the only listed player which is exclusively in the air cooler space. Some of our other major competitors are either not listed or are listed, but they do not share air cooler numbers, individually. So the market share numbers that we have been talking about are what we gather from market sources. So it will be impossible to sort of say, okay, 50 will become 51 or 52. So even the total size of the market is more of an estimation than anything else. India as a country is something where numbers are not very sort of readily available. So it will be difficult to sort of be very precise.
No, if I may ask, sir, if suppose we want to know, is there any severe damage to their business during this lockdown period? Have you got any kind of sense as of now?
Everybody has been affected, to varying degrees. But beyond that, really, we have no specific information.
Sir, what about dealer network vis-a-vis 20, sir, in FY21?
So the dealer network is expansion of our dealer network is an ongoing sort of an issue at Symphony. And we have expanded, and as we speak also we are expanding in the current quarter also. It will be expanded, but again, we wouldn't like to talk about specific numbers.
Okay. And about launches, sir? I mean, in terms of absolute numbers?
Okay, in the year 2021, how many launches did we do?
I think all in all, we had launched under various range 30 plus new models in last 2 years.
Okay.
That is under residential range as well as Movicool, that is centralized and ducted cooler.
Okay, sir. Okay, thank you.
Thank you. The next question is from the line of Neera from Anand Rathi. Please go ahead.
Hello, sir, and thank you very much for the opportunity. My question pertains mainly towards the long-term debt that we have of around 140 crore rupees. So, sir, considering that the scenario for our overseas subsidiaries are improving, so can we expect that in maybe next 2 to 3 years this long-term debt will also be repaid? Or any color you can share on the debt repayment trajectory, because we are critically told that this debt has been taken for acquisitions and will be repaid from the cash flows which are being generated from these acquisitions. Thank you.
No, very true. So as such, repayment of the debt starts post June 22, but there is a good possibility that there may be either prepayment or for climate technology, we may like to reduce or repay the working capital facility. And certainly the acquisition loan is going to be served from the cash accrual of climate technology. So, but we don't expect entire acquisition loan to be repaid in 2-3 years. It will take slightly a longer time.
Thank you, sir.
Thank you.
Just to add to this, basically the purpose of taking the acquisition loan was to take the tax advantage of the interest being the tax deductible expenditure, right?
Yeah, and also we have availed this loan in Australian dollar, so that because Australian dollar fluctuates quite heavily, say as on 31st March 20 versus 21, Australian dollar has depreciated almost by 16-17%. So repayment obligation is also in Australian dollar. So in a way there is a forex arbitrage, and thirdly the loan is now priced at about 3.60%. Otherwise, from our treasury itself, we could have very lent it. But there is still a decent arbitrage between the treasury income versus cost on this borrowing.
Absolutely.
Thank you. I would now like to hand the conference over to the management for closing comments.
Well, just like to thank everybody for their participation, and we are hoping that all of you and all of us, stay safe, and looking forward to interacting with all of you at the next quarterly conference, where we hope that the pandemic is a thing of the past and we are able to celebrate with very, very healthy numbers. Thank you.
Thank you. On behalf of Investec Capital Services Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.